Welcome to another episode of HainesDirective Pod. My name is Chris Haines, your host. Every single episode, we are grounded in educating, energizing, and elevating all listeners, myself included. And we all know we've been watching the news, we've been seeing things that are going on around the country when it comes to finance, right? When it comes to managing businesses, you're noticing on the news when businesses talking about we have to lay off folks. We also saw, unfortunately, with Spirit Airlines, running a business is grounded in financial management. That is the most important thing, making sure that we're keeping track of all of our finances, that we're not getting into debt. If we are getting into debt, that we're managing that debt, that we're taking a look at our revenue streams. How can we generate more cash? How can we make sure that we're paying our employees, giving them the benefits and retirement planning that they need, while also making sure the business stays afloat? So that's one of the main components. Yes, we're providing a service or we're providing a good as a business owner, but you need to make sure that you're managing your finances well because as we see, businesses will start to lay off folks, go into bankruptcy, et cetera, if the finances are not up to par. So today we have a very special guest coming on to the show to just talk about debt elimination, talking about financial management, et cetera, et cetera. And let me tell you, this topic is so important because we know that throughout all of our lives, we have to manage our finances. That's one of the most important things that we have to do. If we don't manage it well, we see what's going to happen. Okay. And one last thing I'll say before I introduce our special guest to the show, we have to keep in mind that even when you're building your business plan, even when you're starting a nonprofit, et cetera, it's always going to be grounded on finance, right? Finance is the most important thing. You cannot run it effectively without it. Okay, so I'm bringing on a special guest. We're going to talk about it. Ruben Lowen is the founder of My Business Is Your Business, where he leveraged his background as a Navy SEAL to bring technical precision to the financial services industry. A specialist in debt elimination and wealth protection, Ruben focuses on empowering individuals to build generational legacy through holistic financial planning. He is a firm believer that true wealth is built on the foundation of a disciplined mind, body, and bank account. Everyone, please welcome to the HainesDirective Show, Ruben Lowen. Thank you for being with me.
Well, thanks for having me on. This isn't, you picked a topic that I like. I talk about all the time.
Yeah.
It's my favorite topic, right? When it comes to, and I've been doing this for a while. When I first got out of the military, every time I wrote a resume, came up something carrying a gun, and I
Mm.
really didn't want to do that anymore. And about 2 years before I got out, I uh, I was writing a newsletter called Bad News: Boxers Against Drugs News, and I talked a lot about leadership that I learned in the boxing ring and in SEAL teams. And
Yeah.
somebody suggested I start going to schools and talking to the kids, and I'm like, oh well, And somebody told me about Toastmasters, and I went to a Toastmasters meeting, and I just got hooked, right? And I saw the undercurrent of leadership within the structure, and then I learned the same strategy I learned to uh, to memorize my speeches. I used it to memorize my pitches and my closes first, so that's how I got into sales from being a Navy SEAL.
Yeah.
Okay, and then I was making sales, but I still wasn't making enough money,
Mm.
and I started self-educating. I read every book you can get your hands on personal finance and debt management. And I learned about a debt roll-up strategy. And I didn't even know how to use Excel. I had a whiteboard behind my bedroom door. I had all my debts on it, the highest debt to the smallest debt. And every time I paid my bills, I'd change the balances. And then when I paid that first debt off, I took that amount of money, that monthly payment to that debt that was
Yeah.
eliminated, and I added that payment to the next smallest debt. So everything above and beyond the minimum goes straight to principal, lowering your effective interest rate, paying everything off faster. And I got myself out of debt in a reasonable amount of time. And then I answered ad in the paper as a debt management consultant. And
Mm.
they this like it was a group interview, guys way more sales experience than me, PNC, life and health, mortgage, real estate backgrounds. And the guy presenting, first thing he said is, we're a debt management company, and we put everybody into a debt roll-up strategy. I knew what that was. And if they have equity in their home, we have a relationship with a subprime lender. We will do a strategic consolidation, paying off the debt that's going to create the largest margin of savings, and take that savings and add it into the debt roll up. And we'll incorporate consumer credit counseling and debt settlement strategies. We will get you completely out of debt, including your mortgage, in as little as 5 to 10 years without increasing your monthly payments.
Mm.
And I could read everybody's mind thinking that sounds too good to be true. But I'm thinking, from what I read, I think that might be possible. So long
Yeah.
story short, I ended up submitting more business than anybody had done for them in a year and a half, my first month, and they made me the manager.
Wow.
And then every time I showed somebody how to get out of debt, they start looking at buying a house.
Mm.
My real estate license, I started doing mortgages and real estate. And at that time, I tell everybody, if I had a crystal ball, I couldn't have picked a better time to do that when I did. I averaged like $200,000 a year, like 5 years in a row. But then it stopped, and it stopped for me in 2006 because I was heavy with construction lending.
Yeah.
And that took a hit in 2006. And then that's when I started my transition into financial services. And then my crystal ball wasn't working really well. That's when I got all of my licenses November of 2007, and then everything collapsed. And so
In a recession, yeah.
I felt like Nebuchadnezzar, man. My wife left me. My dad died.
Oh,
It's everything collapsed all at one time. And I did other things. I went out to the Indian Ocean as an anti-piracy security agent.
mm.
I hated that job. And that led me to the drone business because I'm like, there's got to be a better way, right? And then that was fascinating. But then 6 months into it, the FAA put a blanket restriction on commercial drone operations, which put me out of business.
Oh.
And then I got into the beginning, early stages of the transition to LED lighting. And that was hard because LED lighting was, LED lights were more expensive, but in the long run, they work out to save you money. Okay. And so that's how you had to present that, right? It's like right now it's going to be more expensive, but down the road, it's going to save you a lot more money because they last forever and they save you energy, all that. And then I got contacted, and that was feast or famine. And then I got contacted by a retired Army Ranger colonel, Vietnam vet, had a PhD, had like 6 businesses that supported the produce industry. And that's where I first got the firsthand experience on that concept of the synergistic business strategy. That's having multiple businesses that support the same industry or that use your same knowledge base to get more streams of income. Because when you're young, time's your greatest asset. Like I was telling you, I love working with guys right out of trade school because I can take a HVAC tech or a welder or an automotive mechanic who's making, they're making 60 grand a year, man. They're making $5,000 a month. They got their own apartment. They got a car. They got food in the refrigerator. They're like,
No student loan debt for the most part.
right. And so they're like, life is good, right?
Yeah.
And showing them by putting like $650 away of
Yeah.
that new money that they haven't figured out how to spend yet.
Right.
By the time they're 57, they're a millionaire just doing that.
Yeah.
Okay. I got the numbers memorized, right?
Yeah.
But when you're older, you don't have the time.
Right.
So now your knowledge base, whether it's technical or whether it's with accounting and numbers and figuring out how, the little strategies that can make your business more financially efficient, or the business you're working for more financially efficient.
Yeah.
Got a buddy of mine, another Navy SEAL. He became an accountant, but he liked working corporate, so he became a truck driver.
Wow.
But he used his accounting knowledge and made smart investments, and now he's retired. And so because but he liked driving truck, he liked traveling and all that. He just told me all the stories, right? All everywhere he got to go, been to every country, every state in the union, got to see all kinds of stuff, and he managed his money, and now he don't got to work anymore, right? He just does what he wants. So these are those kind of things you can do that can create those multiple streams of income. And so that was the one industry that I have a lot of knowledge on,
Yeah.
the food safety industry, right? The other one is the hair business. I had a girlfriend. She was a hairstylist in San Diego, California, but she was also a celebrity hairstylist and a master wig maker. And she was making like $240,000 a year doing hair in 2007. But when 2008 hit, her income dropped to like half. And I'm in 2010 and helped her. I helped, helped her set her up. She was going to the payday loan place to get through the month every month. I'm like, oh, no, that's like high interest, so high it's like extortion. And I said, I set her up with a debt roll-up strategy to pay down her debt, but keep her cash flow so she could function. And I set her up with I took her to her bank and I got them to set her up with a business line of credit so she didn't have to go back to the payday loan place anymore. And then she was a master wig maker. And she had like 13 of those clients. And back then, they were paying, the health insurance companies pay for the prosthetic wigs for women who have alopecia or go through chemo and radiation. And so these women were in like clockwork, like every 3 weeks. And each one of them was like a minimum $450 a pop. Right. And so I structured her in, saving more of that money than spending it. Okay.
Yeah.
And then she started introducing me to her friends who were in the cosmetology instructors or had their own salons. And then I went down to the Rio Grande Valley, and there was like the amount of barbershops and hair salons down there is like crazy. It's stupid.
They all got their businesses down there in the Rio Grande.
Yeah, and they save their money. The women in California, they spend their money like it's like going out of style. It goes through their hands like water. In the Rio Grande Valley, they save their money, but they save it under the mattress. They don't trust the institutions. And then here in Houston, it's they're just everywhere. The beauty industry's everywhere here.
Yeah.
So
charging a lot of money.
So when you can show a stylist, spending maybe $800 to get certified to become a master wig maker, and add that to your bottom line, now you're starting off making money. Good money. You can make over $100,000 like your first year if you have the clients and you're managing your time, right? And then another aspect, my son is an HVAC technician in San Diego, California. And he's, Dad, I want to do one of these infinite banking strategies, right? Well, he doesn't own a house, so he doesn't have any debt to pay off. And we're going to talk about that after this, but I set him up with an index universal life policy. His target premium is $168.13 a month. He can max fund it to like $1,066 a month, which is, $12,750 a year. Okay. And it's all tax advantage, right? And because in the summertime, he makes money hand over fist, he can overfund his policy. And in the winter times, things slow down. There's been a couple times where he's had to borrow from his policy, take an awash loan. That's how you get tax-free money out of life insurance when you retire. It's after-tax dollars, and it grows tax deferred, so it grows faster. And when you take it out, this is what happened. Let's say you got $1 million built up between your contributions and the market gains. You've got $1 million in your policy. You're like, I am done working, right? And so you tell the insurance company, I want $60,000 a year, I want $5,000 a month, and they'll take it out of your cash value of your policy, and they'll give you a credit of, let's say, 5%. And then they put it in the general fund of the insurance company, and when they pay you out as a loan, charging you 5%. So the credit covers the interest. It's a wash, but you don't have to pay tax on that money. And your death benefit pays it off. Your death benefit's your collateral. Okay, but you don't have to wait till you're 59 and a half to get that money.
Yeah.
Okay, you can get it when you're young. So in his case, in the slow months, he borrowed from the policy, then paid it back in the summertime when he made, was making extra money, right? Now, when you're talking about these family banking or infinite banking strategies, that's a strategy, that's a way of adding gas to the fire, paying off debt. So I used to talk about a debt roll up and the pill method. The pill method is adding an extra principal payment to your policy, mid-month. Okay, so there's a calculation that'll tell you, it's usually like 11 days after your due date. So if your payment's due on the first, you pay it on the 11th, and you maximize the principal payoff of the debt. So if you, just because I have these numbers memorized, right? If you have a $338,400 mortgage at 5% interest, your principal and interest payment is $1,886 a month, but only $500 a month goes toward principal. That's why it takes you 30 years to pay it off. Okay, but if I open up a whole life policy, and whole life is significant because it's the only asset that will still give you a rate of return, the guaranteed rate of return on the borrowed money. Okay, so you overfund your policy. So let's say you're like, let's say you're like my son, right? And so you overfund, you pay $2,000 a month into the policy, and you borrow $1,886 out every month, and you pay your mortgage on time. You get full credit for that $1,886 a month in that policy, and you don't accrue interest because you're paying that every month. So you're paying it off every month. Okay, and it grows. It's gonna, after the first month, now you're accruing your balance in that policy. Okay, and by 9.2 years, there's enough assets in the policy to completely cover the balance of the remaining balance of the mortgage. Now you borrow that money from the policy and you pay off your mortgage. Now you're paying yourself back. And these companies, these mutual companies, treat the policy owners like shareholders. So when the companies do well, they pay a dividend. So with the dividends, they're averaging just under like 12% now. Okay, so when you pay it back, you're growing more. So in this illustration, I'm showing the paying off the house. Now I thought, what about, how would this work for real estate investing? So I found a 4-unit here in Cyprus, just a little over $1 million. So now borrowing enough money to make a down payment, 25% down on that 4-unit, borrowing that from your primary residence, which is going to be the cheapest money you can borrow, and it's below 50% loan to value, right? It's going to be cheap money. And then opening up another whole life policy for the 4-unit. So you got one for the primary residence, one for the 4-unit, and the rents from the 4-unit are going to cover the mortgage payment on the 4-unit and the new mortgage on your primary resident. You run those through the whole life policies. So your tenants are basically not only paying down the debt for you, but they're building those assets for you. So by year 20, it's year 10 for the actually it's year, by less than 18 years, you'll have 2 properties free and clear.
Yeah, that's yours. You got to pay the property tax and the homeowner's insurance.
And you'll have like $450,000 in these whole life policies. And then by year 30, where you would have still been paying on that mortgage, now you've got $1 million in your policy with these tax advantages, and you've got 2 properties. One's cash flow on the 4-unit. It's just a moneymaker for you. So those are strategies that work within the real estate investing world. There's other, here in Houston is one of 3 underwater welding schools in the country. There's one in Washington State, and there's one in Rhode Island. and they're teaching them, they're making them get their Part 107 license so they can operate the underwater drones.
Mm-hmm.
Okay. And
That's
you could use
business.
that same certification. Now you can fly a aerial drone. So
Yeah.
let's say you get a contract to manage a pipeline or water towers. You get paid to fly the drone, find the damage, break out your cutting torch and your welder and fix it, right? And then I'm telling that to a guy that just graduated from automotive repair school, making 60 grand a year, and he goes, "Man, I'm glad you called me. I got all my, I paid my mortgage. I got my refrigerators full of groceries. I got gas. I got, I paid my cable, right? I had about $1,000 left over. I was going to go get another tattoo." And I started telling him about the underwater welders. He goes, I was thinking about getting certified as a welder. I'm like, that's a great idea. That goes great together with being a mechanic. Get a contract for, these with a
Yeah, they
logistic
can run
company.
their own business too, once they
Right,
get the certifications. Yeah.
right. So there's all kinds of, you know, give me a business, you know, and let me see if I can think of a way to, make that cash register ring a little more, just with the knowledge base of somebody who owns those businesses.
And Ruben, talk about there's so much information you gave, and listeners, I hope that you're more educated, energized, and elevated from what Ruben's talking about, because there's so much stuff, right, going on when it comes to your finances, retirement. So sad that we're seeing folks that are in their 60s, 70s going back to work because they're not
Yeah, they
able,
didn't say.
they didn't save appropriately. We don't want that to happen to anybody that's listening to this podcast. That's scary stuff. I remember when I took a class in graduate school, and it was called Pensions and Retirement. And the professor, he was a retirement attorney, and he said, "This class is preparing you from when you stop working to your death." Because you got to have money in place, right? We still got
Yep.
to pay. We got groceries, we got our cell phone bill. We still got to pay that, even though we're not working. So we got to plan for it and plan it appropriately. And Ruben, you're giving so much good advice about that. I want to ask you, for folks who are pivoting, becoming entrepreneurs, opening their own business, etc., what is the one thing you want them to keep in mind when it comes to managing their finances and also their debt management? Because launching a business, you may take out a business loan, you may take out other things, and now you're in debt. So managing that debt as a business, so that way we don't go under. What is your number one advice for people that's doing that, or current business owners?
Okay. Well, it's going to be find a way to pay yourself first.
Yeah,
It's really, really hard for someone like me to help somebody
yeah,
who's spending everything they're making already and try to get them to change their spending habits
right.
to be able to put something away. Okay. But when you have these strategies, so the same money you're paying toward your debt or your business expenses, putting that through a vehicle that's going to capture the debt service or capture that regular payment that goes out every month. Okay. And so I'm educating myself on these strategies, and I find a video of a guy a retired, he was a Naval Reserve officer, and he used his VA loan to buy his house. But he implemented these strategies to pay off his mortgage faster. He opened up a policy and ran the mortgage payment through the policy and paid that off significantly faster, less than 10 years, probably like 7 years. Okay. And then he he borrowed equity out of his house and bought a fitness franchise.
Mm.
He opened up another policy for that. He has like 4 fitness franchises, and he's got a whole life policy for each one of them, running the uh, the debt service, the business loan
Mhm.
payments through each one of those whole life policies. So here's what I'm telling you: if you have, and because of this strategy using the whole life policies, capturing the money you're already spending to build it as an asset with all kinds of tax advantages, right? That opens up a whole new world because you're spending that money anyways.
Right.
Does
Yeah,
that make sense?
absolutely.
So so that was like, okay, all I got is where you spend. I don't care if they're a renter. If somebody's a renter and wants to buy a house, I help them figure out, what what can we do? So I open up a policy for them that we get them to overfund it enough to cover all their debt service. I don't care if it's their car payment. I don't care if it's a credit card. I don't care.
All right, yeah,
It can
100%.
even be their mortgage payment, right? And in like 3 years, they got an asset. So now that's going to help them qualify for a loan to buy a house.
Mm, hmm.
See what I'm saying? Right. So now they're looking better. And then you ever heard of NACA?
Hmm.
You ever heard of NACA?
Naka, yeah, but the listeners, explain to the listeners, Naka.
It's a neighborhood something association of it's NACA, and they don't care what your credit is. You just
Hmm.
have to have cash flow, and they you have to meet with them, bring 3 years tax returns, and they'll you they help you set up a budget, and they're
Hmm.
going to meet with you every month, and they're going to keep tracking, what you're saving, and
Yeah, the
you know,
accountability measure for them.
right,
Yeah.
and once you build up enough assets, usually it's like 3 months, right? 3 months PITI, right? They'll get you in a house, and they'll even a 4 unit. You can live in 1 unit, and they'll let the other 3 units help you qualify, all right? And now you got your living is paid for, your house is paid for by your tenants.
And that's the most expensive, that's the most costly thing is your housing. And to have that paid for is amazing.
Right. So then once they get in the house with that mortgage, then I
Yep.
got these strategies for them. Right. So I have them, I have a banner on my website, my business is your business.info.
Yes,
And
listeners, please go to that website and connect with Ruben because the advice that he's giving is so important because, in this life, that's the main thing we're dealing with every single day. We have to deal with our health, we got to deal with our career, our kids, our family, our houses, etc. But we got to deal with the finances. The finances are one of the most important things. And Ruben, you're giving out some good information for people to go to your
so
website.
I'm a member of the Christian Entrepreneur Club,
Yeah.
and they have me as like one of the leaders regionally. I'm like the representative here in the Houston area. And I'll have these, they have handyman businesses. They may have logistics
Yeah.
business, a roofing business, um, the uh, maybe be in the hair business, whatever, right? And what they're looking for primarily, they're looking for somebody that's in the group to become a customer of theirs or refer their customers. Do that cross marketing strategy, which is great, right? But what I ended up doing is I get them to think about what could they do with what they know that could make the cash register ring. Okay. And then one of the things is like marketing, right? And I learned this all of a sudden, I started getting all kinds of construction loans coming at me when I was in the mortgage business. And I'm like, where are they coming from? Well, my hobby was shooting.
Yeah.
I had an expert 40, H&K expert 45. Doesn't take you but a minute to see me shoot the bullseye out of the target with my right hand and do it again with my left hand, that I know what I'm doing. And I started teaching these people how to shoot better. And what was going on is they would see my level of expertise in shooting and overlay that with everything else. And that's, if you're one way in one thing, you'll be that one in anything else. If you're a winner, Roy Jones Sr. used to say, if you're a winner, you're going to be a winner. If you're a quitter and a loser, you're going to be a quitter and a loser. Right. And all of a sudden I just started getting all kinds of business coming at me. And so I always ask people, so what is it that you do as a hobby, that thing that you would do, even if you weren't getting paid for it? What is that? Because you're probably good at it, and people are going to see you doing that thing, and they're going to do the same thing. They're going to say, okay, look at the competence this guy has. I don't care if it's music. Music's a good one, right? If athletics, people like to do, like run 5Ks, 10Ks, marathons, half marathons, things like that. If you're uh, weightlifting at the gym. I mean, there's all kinds of things that people do they don't get paid for,
And yeah,
and they could take it just doing it to garner positive attention can help increase your bottom line.
yeah, yeah.
So anything I've said,
That's
you
so
know,
important for people.
you know, and if you're doing, if you're doing podcasts or if you're doing, you know, if you can,
Folks are in the content creation now and things like that.
yeah, if you can find a way to make money doing that thing you love to do, you'll never be broke
Yeah,
because you're gonna do everything goes up and down,
you gotta have
and
that passion. Yeah,
if you can still do it with passion when it's down, you'll still make money.
yeah. And so many folks right now are telling themselves, they're in a those folks that are in a job right now, they don't like it, but they're scared. They're scared to pivot. They're scared to take a leap on faith. But like you said, when you're passionate about something, the money's gonna come. It's gonna be okay. You just gotta have that faith and know that it's gonna work out okay. And you don't
Yeah,
want to have a life of regret either. Yeah,
I was at a meeting last night,
yeah.
uh, a men's group, church meeting, and got a new guy there.
Mm.
And his business is setting up home gyms. Oh, this is a good one. Home gyms, because that's a trend now. People are,
Yeah.
instead of going to paying
Because
for 20
it's sitting out at
fitness.
traffic too, especially Houston traffic or wherever your listeners are. I mean, to go into the gym, it can take about 20, 25 minutes, depending on where you're at. So that's
So
20, 25 minutes you could be working out at your house. But go
yeah.
ahead.
So he's like thinking, I need to, I'm like, dude, you ever think about franchising what you do?
Yeah.
Right?
Wow.
The demand is silly. I got a guy, he's I did a podcast with, he started the Veterans Franchise Board. He's got
Mm.
all 30 different businesses. One of them, he calls it the Quick Mount Heroes Initiative. And so he waives like the $30,000 franchise fee for veterans.
Mm.
Is it's mounting flat screen TVs, setting up homes and businesses with entertainment centers. So you ever go to a coffee shop and you'll see like 4 flat screens around the coffee shop,
Yeah.
just running their ads, right, for their coffee. And whatever they're selling, their bags of coffee or the beans or whatever, right? And well, I figured out if you mount 4 flat screens a day, 5 days a week, your net is going to be about $7,500 a month.
Mm.
And so that same, now I have a guy, and I know this because I had a guy when I was the estimator for LED City out of Dallas. They had this great digital sign, this digital video wall technology. And so one 10 by 20 flat screen in a church or an event center, a sports bar or whatever, right? It's the same basic technology or strategy to mount the flat screen as it is to set up the video wall. Okay. And they would, that one video wall equals 4 flat screens a day, 5 days a week.
Wow.
That double their income just having that asset to set up, right? So those are just things, and I just have to pay attention. You know, I like people that have like HR people, right?
Yeah.
An HR person that knows what he's doing
Yeah.
can really significantly increase the cash flow for a business.
Yeah. When we know where to put the right people, studying the organizational structure and responsibilities and accountabilities for each role in each department and what their deliverables are is so important in running a business.
Yeah, I got a buddy of mine lives right down the road. We both were in the SEAL teams together. We both came here to Houston about the same time. Totally, we didn't find each other for a year, right? We live
Yeah.
like 7 miles away. He's got a master's in leadership, and that's what he does. He goes into business, and they got like their clients are like Wells Fargo and
Yeah.
Exxon Mobil, right? Big companies, right? And what his main purpose is putting the right person in the right position and it can make all the difference in a company.
Yeah, and making sure those deliverables are executed appropriately and efficiently and on budget and on time. And Ruben, how can people get in touch with you, the listeners? I know your website is my business is your business dot info. How else can people just get in touch with you?
Yeah, my phone number it's 956-255-0061.
Okay,
And my, it's my email and my phone number is all over the website.
it's on the website. And
Yep.
listeners, go to my business is your business dot info. Get in touch with Ruben. And let me tell you, Ruben, I hope all the listeners, I know I've been more educated, energized, and elevated from you. And finances is most important. One of the most important things. Your health is important, of course. Your health, making sure that you're picking the right careers that you're passionate about, that you're managing your business appropriately, but making sure that we're taking a look at our finances so that way we're streamlined, we're ready for retirement, we have our life insurance policies in place, and that we're doing the right thing so that way we're prepared not only for ourselves but for our friends and for our family. Thank you,
Yep.
Ruben. That concludes our episode of Haynes Directive Pod, another episode where we're educating, energizing, and elevating. Thank you, Ruben. I appreciate you.
Well, thank you very much for having me on. Are we done?